All right, I'm gonna share with you why I just sold 3 rental houses in one of the hottest markets in the country to turn around and redeploy that capital, not into little green houses, but into some red buildings, and how that's going to triple my existing cash flow without bringing any additional dollars to the table. This year, on my journey to acquire over $100 million of commercial real estate to have in portfolio, which is gonna have the cash flow that my family needs, and a lot of my friends and colleagues who are also gonna be able to participate in those deals, have them in portfolio. This is legacy building, generational wealth type of stuff that we're working on here. And I'm pulling back the curtains and showing you exactly what's going on behind the scenes week in and week out. So if that's not reason to subscribe, I don't know what the hell is, and I'm just gonna quit and not do any more of these. So thank you in advance for your support. I appreciate it. I end up with about $800,000 in equity in these 3 properties. One of them I bought 10 years ago. It was my second ever. It was a duplex that I bought. And then 2 of them were keepers that I did flips on. And so I did the Burr model, right? You buy it, you renovate it, you rent it, you refinance. I was able to pull all the cash out of those deals, so I had no money in, which is nice. It's infinite returns. But what I was not thinking about, because I was off doing other things, was the cash on cash returns sitting in the portfolio. So on that $800,000 of equity, I've got $50,000 in annual income coming in. So that's about a 6% cash on cash return. What I know based on the last 4 commercial deals that I've done is I can get well into the teens and in some cases exceed 20% cash on cash return. So if I did that and I just turned around and redeployed that equity by myself into a fixer-upper commercial deal, and I realized that 18% cash on cash return, that should roughly triple the free cash flow that I had in those rental properties. So instead of $4,000 a month in cash flow coming in, I've got $12,000 a month or better. Okay, so we got the big picture idea here, right? We're gonna take that $4,000 in cash flow and hopefully be able to triple it by selling at the top of the market when these properties are going for 120% of what they're worth, multiple offers, over asking, the appraisals are coming in, it's just bananas, and then turn around and go buy distressed commercial real estate at 50, 60, 70 cents on the dollar. So what's gonna happen when we do this is basically a Burr commercial edition, right? So we'll go buy a fixer-upper, we'll renovate it, we'll rent it up, we'll turn around and refinance it and be able to pull out a lot of that initial down payment that went into the deal. So imagine this, that let's just say that whole $800,000 gets deployed into a deal or 2 or whatever that looks like. We're able to double the values of those property. We go to an appraiser and say, I want to take out a loan, 60% leverage. We pull all that cash out of the property and then we can turn around and do it again. And so now we go buy another fixer-upper building, lease it up, double the value, repeat the process, do another refinance, pull that cash out, and you can see why this process can be done over and over and over again. So it's getting $10,000 a month in cash flow on the first deal and another $10,000 a month in cash flow on the second deal. And maybe that takes a year to fully execute that business plan, but that's how we can get to $1 million a year in cash flow and $100 million portfolio, I think realistically in the next 3 years, as long as we've got some deal flow coming in. So brokers, I'm looking at you, I'm relying on you to help me find those fixer-uppers and those opportunities. It's one of the reasons why I've been making more of these videos. So my friends and family know that I'm gonna be buying a lot of commercial real estate here in the next couple of years, and the brokers know what my business model is, so we can get some great looks at some unicorn deals, so we can get pocket listings, so I can find stuff that we can go in and significantly increase the value to force appreciation, so we take advantage of all those profit centers, right? The cash flow, the rents going up, the loan paying down, the tax advantages, building up both the balance sheet and the P&L, putting some more chips on the sideline while increasing, all the profit centers all at once. So that's the idea. So the next couple videos, we'll be sharing one of the upcoming projects that I'm close to closing now. It's a brewery that'll probably fund my kids' college, show you an interesting thing to think about there. I'll be sharing how I'm going out to source some of these unicorn deals and what the marketing plan looks like consistently, month in, month out, how I forge new broker relationships, how we do direct mail with owners, basically the behind the scenes of what it looks like to go out and buy 3 or 4 or 5 of these buildings in any given year and not be constrained only by the cash that we personally bring to the deal, but bringing in partners so we can do it over and over and over and over again. Look forward to your questions. Thank you in advance for commenting, for smashing that like button and subscribing to the video. See you on the next one.